Wow. Amazing. We have the Lynn Alden fan crowd here. Thank you, everybody, so much. It is so amazing to be here with our community. The Bitcoin community here in one place in person is so strong. So first of all, I just want to give everyone a round of applause for being an awesome community. It has been quite the year,
Definitely.
right? And quite the year for the Bitcoin community, quite the year for the Lightning community. So I'm really privileged to be here with my good friend, Lynn Alden. We've become friends on the internet. We've had so many great discussions. And she and I will be going back to back. We'll be doing questions between each of us, and we'll hear the technical perspective, the macro perspective, the financial perspective, and all of that. So Lynn, do you want to take it away?
Sure, happy to. Can anyone hear me good? We're good? All right. So basically, when you talk about Bitcoin, we can think of it in two separate types, right? So there's Bitcoin, the asset, which is a bearer asset. It's the first widely successful digital native bearer asset, meaning that we can self-custody it with encryption. We can send it to whoever we want. And it has all these inherent benefits as a store of value. It is emergent. It's volatile, but it's being, basically it's exploring its total addressable market over these past 12 years, and hopefully a lot more to go. But the other side of it is the monetary network. So it's the specific ability to send permissionless payments to anyone in the world and to not rely on any sort of trusted third party or any entity that can block your transaction. And so Elizabeth focuses on the monetary aspect as the CEO and co-founder of Lightning Labs. So my question for you is, what made you decide to focus on that aspect of Bitcoin compared to all the other things you could have focused on?
So we're 12 years into Bitcoin as the asset, right? Satoshi, the launch of the network, 3rd January 2009. And Bitcoin, the asset, is so significant. We have this entire community here today. But if Bitcoin is only an asset, we miss out on the massive potential of Bitcoin as the monetary network. So a lot of people talk about the idea of digital gold. But my take is, if Bitcoin is merely digital gold, we don't tap into the massive potential that it enables as a monetary network. It's not just a digital rock. So we in the Lightning community have been building out technology for layer 2 on top of Bitcoin to enable all the use cases of magic internet money, which were not previously possible. When you can natively embed money into the internet, we heard Jack Dorsey yesterday talk about Bitcoin as a native currency of the internet. You unlock use cases that were not previously possible. People may be familiar with Strike from the awesome entrepreneur Jack Mullers. All these really amazing use cases that are emerging when you natively embed money into the internet. And not to mention, by the way, so today, our topic of discussion is Bitcoin for billions, not billionaires. There are 6 billion people around the world that are living in places that don't have access to good financial services. Hyperinflation. They don't have the privileges that people in places with good financial systems do. And Bitcoin is extremely significant because it's permissionless. Anybody can build upon it. It's this open source monetary network. So right now we're about 3 years in to the idea of Bitcoin as this monetary network, but it's very much the beginning. And we're seeing all of these new use cases emerge that I'm really excited to chat about today. So one of the things I'm really passionate about is the network effects that come along with Bitcoin. A lot of people say, OK, well, we're going to build a better Bitcoin because it has this feature, or it does this better, or that better. But actually, Bitcoin is the most secure cryptocurrency. It has the most hash power backing it up. And it has this massive network effect. And Lynn, by the way, if anybody has not yet read it, you need to read Lynn's piece on Bitcoin network effects. I've sent it to all of my friends, so definitely check it out. But Lynn, you've been exploring Bitcoin, network effects. You wrote this incredible article, The Idea of Metcalfe's Law, and I'd love to hear your perspective on why this increased your conviction in Bitcoin as an investment asset and as a technology.
Absolutely. And so I began covering Bitcoin a little bit back in late 2017. And so for people that don't know me, I cover multiple asset classes. I covered equities, commodities, all sorts of different, anything that basically has macro significance I cover. And I initially covered Bitcoin back in late 2017, and I passed on it for a couple reasons. One is that it already had that giant price run up, and then two, I was basically exploring Bitcoin, still learning, and I had concerns about its network effect compared to all the other cryptocurrencies out there. And if you look at the other types of bearer assets, right? There's physical cash, And that's, of course, backed up by the force of a government. They can basically mandate that it be spent and basically accept it as legal tender. Then there's precious metals, and there's only a handful of them. And so with Bitcoin, the big risk there is that because it's an open source protocol, all these other ones can come and copy it. And so my main thing I was watching was how strong is the network effect? How able is it to withstand the ocean of other competitors? But as I watched it over the next couple of years, I saw the price consolidate. I saw the network effect continue to be built out. So all of the institutional custody solutions, better and better hardware, so better wallets, better multi-signature security solutions, and just seeing the strength of the community and how separate the community was from the sea of other things out there. And so over time, my conviction kept growing and growing, and by the time we had that early 2020 liquidity issue, that's when I finally said, you know what, I'm in. And so it's been a wild ride learning about all the different aspects of Bitcoin. And one of the things I focus on is monitoring over time the network effect and the continued growth of the protocol. And eventually that initially started on the base layer, just kind of analyzing its hash rate, analyzing how much users it has, the market capitalization. But that eventually extended to the Lightning Network and the layer 2. And that's where Elizabeth has been super helpful. I've relied on her for answering some of my technical questions. And what I find interesting is that in some ways, the layer 2 aspect actually it's more reliant on the network effect than even the base layer, because the key limitation of the second layer is liquidity. And the more liquidity that develops over time, and specifically liquidity in the right locations across the network, and the most the real type of liquidity rather than just how many sats are on the Lightning Network. But the stronger that gets over time, the more and more usable that network it gets, and the more it entrenches itself as a protocol of value. And so that's been super helpful. So yeah, people can read that article if they want the full thoughts. But that's it's been really important to basically monitor the network effect and see it continue to grow. And that's, of course, it's separate than just the price fluctuations from whatever billionaire is tweeting in any given day. The actual underlying fundamentals of use cases and integrations and technology improvement is the key thing to keep focusing on for Bitcoin success. And all the people here working on it, they're the ones that are just responsible for continually pushing it forward in this beautiful decentralized way.
One of the really interesting things you say in your article is how, in order to break a network effect, something needs to be 10x better. And there's a concept of Metcalfe's law, which as each individual user is added to the network, the value of that network grows exponentially, which I think is extremely significant. But Lynn, you've also talked a little bit about 2017. How many people here remember the events of 2017 in the Bitcoin world? I'd love to just briefly hear, how did that change your perspective in terms of the network effect?
Well, I mean, I was kind of watching that part from an outsider. So seeing Bitcoin and Bitcoin Cash split was part of my initial concern about the network effect. But then, we saw that answered by the market over the next few years. And, going back to the 10x thing, I mean, that was Jeff Booth's original kind of statement that, why, basically, in order for a smaller competitor to outperform an existing network effect, you can't just be a little bit better. You have to be 10 times better. And so, for example, when you see Bitcoin had just by far the most security, the most hash rate, the best decentralization, all these other technologies claiming to be better technology are just not basically putting enough pieces together to even have a chance of coming close to that existing entrenched power that continues to grow in this path-dependent way that it has. And we're starting to see that really extend to even emerging markets, right? So we often the media has a very developed market view of Bitcoin and focuses on it as like a casino asset, but really we actually see some of the most kind of humanitarian impactful use cases in emerging markets. And that's another reason I was happy to be on stage here with Elizabeth, because that's what her company really enables. So we hear a lot about the consumer apps that are out there, but a lot of them rely on the underlying technology that Lightning Labs puts together. So maybe you can talk a little bit about basically how your technology stack is really helping Bitcoin in emerging markets.
Yeah, so over the past year, we've heard a lot around the narrative of number go up technology, right? But we in the Lightning community and at Lightning Labs are really passionate about the concept of number of people go up and bringing this technology to the next billion people, because that's really what's going to make Bitcoin strong, as a technology and as a community. So I've just been blown away by the creativity we've seen within this community. There are so many great examples. For example, Bitcoin Beach in El Salvador, a lot of community members, Peter McCormack, Miles Suter, Jack Mullers, have been down there working with a community where they're living in this circular economy. They're living on Bitcoin and Lightning because they don't have access to, say, the credit card networks. They may have to travel hours to get to a bank to send a remittance. And the potential of this technology is so massive globally around the world for that other 6 billion, right? Lately, we've heard a lot from, say, very rich individuals that say, Bitcoin is bad because of this or that FUD. But I really care deeply about bringing this technology to the people that may not be allowed on Twitter. They may not even speak English, but it's helping them in their day-to-day lives. Another great example, there's an entrepreneur named Cal Casa. My friend Alex Gladstein's been writing a lot about Bitcoin usage in Africa over the Lightning Network. He's using Lightning to send payments back to Ethiopia. Instant, extremely low fee. He's able to pay people and communicate with them using the Lightning Network. There's also an incredible app called stackwork.com, where people can earn sats over Lightning anywhere around the world. It's open, it's permissionless. It doesn't matter where you are. You have equal access to earn money. And this is the true potential of this open source network that this enables. So we've seen a whole host of these use cases. They're only starting now. And the incredible developer community, so we at Lightning Labs are building infrastructure for developers to build on top of. We've had hundreds of applications, hundreds of companies building on this technology. And right now, it's only the beginning of a huge amount of emerging market use cases. Lynn, so you've done a lot of research on the macro environment. Big fan. I've read a lot of your work. And there's a reason why we've seen an uptake in Bitcoin usage in these emerging markets. So I'd love to hear your perspective on what's happened over the past year, what's gone on in the global monetary structure, and how the macro environment plays in.
So basically, one thing I find interesting is a lot of people point out that Bitcoin is complicated, that it's technically challenging to learn. But the funny thing is, if you explore how the existing monetary system works on a global level, it's a Rube Goldberg machine of just madness under the surface. All the details and inner workings of how money flows around the world and how the bottlenecks develop are really severe. And that really kind of shows up the most in emerging markets. And so what we see, for example, and this goes back to kind of the importance of having a degree of decentralization, which is that these emerging markets often rely on the dollar for international loans, international remittances. They need dollars in order to buy commodities, right? So ever since the 1970s, we've had this structure in place where pretty much only the dollar is the currency for buying, oil and other commodities. And so what these emerging markets find themselves in is that they end up, during like a weaker dollar period, based on, monetary policy, fiscal policy, basically a loose policy regime. These emerging markets get all these dollar-based debts. And then, the next few years, centralized monetary and fiscal authorities go ahead and they basically change the dollar policy. They make it a tighter policy, and the dollar strengthens compared to a lot of those local currencies. And what they find is that their revenues are denominated in one currency, a local currency, and their debts are denominated in a much stronger currency at that point. And so many of them have all sorts of fiscal issues, currency issues, and that's where you get some of these big inflationary events like you see in Turkey or Argentina. And it's basically this cycle that keeps going over and over. Every decade or so, there's another round of victims of basically these emerging markets that accumulated debt when the dollar was weak and then ran into all sorts of problems when the dollar got very strong due to literally central policymaker decisions on another continent in many cases. And so, basically what we're seeing over time is that even now, in the past, 5, 10 years, we also see other countries use that system kind of, intelligently in a way that's, not necessarily benefiting those communities, but that, going back to the quote that was said earlier on the stage in the previous panel, show me the incentives and I'll show you the outcome. And so, for example, China used to, we run giant trade deficits with China. They take those dollars and they used to buy treasuries. But because treasuries are yielding below the inflation rate, it's not really a great investment anymore. And so what a lot of them are doing is they're making loans to emerging markets. And then basically those loans are backed by assets. So if the local entities default on those loans, Chinese entities get a lot of those assets, whether it's ports or rail systems or commodity deposits and things like that. And so it's not even necessarily, when you hear about dollar-based debts in the world, it's not like they're owed to the United States. In many cases, it's literally a country like China or a country in Europe making dollar-based loans to these countries. And it's this big, giant cycle of these centralized policy decisions and this fact that, so much of the world's relying on this one other country's currency. And so really, if you go down the whole rabbit hole of how the system works, it's one of those things that's really not benefiting that many people anymore. And so it's natural to see that in some of these countries, especially ones that have been prone to repeated currency issues, that they turn to something like Bitcoin, and they have the permissionless payments. They have a different type of store of value that, even though it might be volatile, compared to perpetually losing value over time in their local currencies, it ends up being preferable. So I don't know if there's anything else, another topic you wanted to focus on.
Yeah, so people may be familiar with the Cantillon effect. And you and I have talked a bit about that, but could you tell us a little bit more about how that fits in terms of monetary supply?
Yeah, so in emerging markets, that's a really clear phenomenon because the Cantillon effect is basically that the closer you are to the money source, the better you benefit from it. So in a given country, that's, basically banks have privileged access to capital, and then as you get further and further away from that. And we saw that a lot play out, for example, in the pandemic, where if you were a local restaurant, you don't have access to capital markets. But if you were a giant restaurant chain, for example, you could get much lower cost financing and able to get through that difficult year in a way that the average mom and pop restaurant couldn't do. And then when you extend that to emerging markets, you're even further away from that source of capital because you might not, you're in a country that you don't have a swap line to get dollars. And so basically if there aren't enough dollars in your country anymore because trade dried up, you can run into major issues that have almost nothing to do with your underlying business. And so it's basically just something that we're seeing play out over time, and the system is currently being strained more and more. And so, we have a few more minutes here, so I guess another question I wanted to ask was, you've talked a lot about the protocol of value and how you see Bitcoin being used in a way that most users won't even necessarily realize they're using it. Kind of like how I don't know I don't pay attention to the full technology stack I use when I send an email, and yet there's actually a lot of layers underneath of that. So maybe you can talk about that sample and see how not everyone has to be a technical expert to basically use Bitcoin and to get value out of using Bitcoin.
Definitely. So as mentioned, we at Lightning Labs are really focused on bringing Bitcoin to the next billion people, and that's something that I'm personally really passionate about. But I believe the vast majority of people may not even know that they're using Bitcoin, and it is this underlying protocol for value. It's this value transport layer. So as mentioned earlier, you have an application like Strike, Jack Muller's Strike Global, where people are able to use Bitcoin as a way to send value globally, instantly, and for extremely low or almost no fees across the world. And this is really powerful. So folks may remember the lightning torch. Was anybody here participating in the lightning torch? Represent? And this is a really great early example of what was possible when you could instantly send money across the world, right? If we had used the traditional financial system to send these transactions, it would have taken days. The fees would have been, tens, if not hundreds of dollars. And it really became something like a meme of money. I'm very big, by the way, into the memification of money, and Bitcoin has really taken this to the extreme in the best way. But the idea that now you can instantly and globally send these transactions and payments around the world is significant. And when you have this protocol for value, people think, okay, well, maybe I don't want to spend my Bitcoin. A lot of people ask that. They say, why would I spend my Bitcoin? Well, one, we are in a place where we have a functioning monetary system. If you look at, say, El Zonte or a lot of the other communities, the Filipino community that's using Stackwork, they may not have access to that. But second, you actually unlock all sorts of really amazing use cases. So shout out to Mint Gox, who I know are at the gaming arena right now. People are earning sats, spending sats within the game. You can have these tiny micropayments where people, the idea that you could send a fraction of a cent before Lightning, that just was not possible. There was no technology that enabled that on the internet, right? People think Bitcoin is too expensive, 1 Bitcoin. Well, you can buy a fraction of a Bitcoin, but with Lightning, you can send a fraction of a cent. So the idea that you can have this natively embedded protocol for value unlocks all sorts of use cases. Another one I really like, how many people here on Sphinx chat? Represent? Shout out to Paul, founder of Sphinx. People think of Bitcoin and Lightning as, the asset, the monetary network. But what they may not also realize is it's a data layer as well. And what Sphinx is doing is it enables you to send chat payments encrypted in a censorship-resistant manner natively over Lightning, and you embed payments. So maybe you're sending chat messages to your friend, but you may have a friend that's sending you too many messages. Well, now they send a sat with each message, and they think, OK, maybe I'll send fewer messages because I have to pay per message. We also have Adam Curry, the podfather in our community, who's been building really great technology around podcasting 2.0. And there's this idea of streaming sats, where now, shout out to Marty, Ben, all the great podcasters, Tales from the Crypt. People are streaming Satoshis, every second to their favorite podcasters. And those use cases that are being unlocked enable this protocol for value where you can finally have payments embedded on the internet. In the early days of the internet, there was this error code. People may be familiar with HTTP 404 not found. Well, there was also 402 in the early 90s, and that was payment required. But at the time, we didn't yet have the technology where you could natively send and require these payments. So yesterday, we had a great panel on creators, Bitcoin, and Lightning with DJs, artists, people from the entertainment industry. And with this technology, you now can stream. One of our community members made a Twitch plugin where you can natively embed Lightning and stream on Twitch. And you can send sats, and you can receive sats. So we're really seeing the beginning of this explosion of Lightning as a native protocol for transactions, payment layers. And again, much like when people use the internet, they don't know about TCP/IP. When you send an email, you probably don't know about SMTP. And that's OK, because this technology will enable people to openly, permissionlessly send and receive transactions around the world without the massive fees that the current existing, say, credit card companies, financial companies impose. And again, we've seen all these use cases, and we're seeing many more being unlocked as we speak. So Lynn, I would love to hear, in terms of your perspective, some final closing words on why you're so bullish on Bitcoin and what's made you so passionate and what brought you here today. Is your mic on here?
Dead battery. So we have about 50 seconds left. So basically, what I'm most excited now is honestly some of the things that we're seeing on the Lightning Network. And that's because Bitcoin is maybe 12 years old at this point, a little over 12 years old, whereas the Lightning Network is about a quarter of that, right? So basically, it's in this much earlier stage. And the media often focuses on just Bitcoin as an asset, Bitcoin as almost like a stock that just goes up and down. And rather than really kind of focusing on some of these on-the-ground use cases, especially the ones internationally. And so, really kind of what I'm watching is that I think just like how the media was surprised by Bitcoin's rise over the past year, and then, same thing as back in 2017, me included, I think what we're going to be surprised about in the years ahead is some of the applications that we're seeing built on the Lightning Network and how kind of important that comes for some of these markets around the world. So thank you so much, and we're really glad we were able to do this.
Thanks, everybody, and number of people go up for Bitcoin. Really excited to be building it with everybody. Thank you.